Hello everybody, I'm John, this is JP Strategic Investments, and today I want to go over Rocket Company's Q3 earnings results that we just got today. We'll go through the general numbers, how they compare to analyst expectations, talk about their guidance, and some of their share repurchasing that is going on. So first of all, general numbers, we got about 3.1, 3.2 billion in revenue, and EPS came in at 57 cents per share. Let me make this a little bigger for you guys here. 57 cents per share right here on EPS. Now, what analysts were expecting, go here, is analysts were expecting on EPS actually average of about 48 cents per share. So pretty strong beat there on EPS, about a 20% beat. And then average revenue estimate was 2.93 billion. So pretty decent beat there as well on the revenue. So as far as this quarter goes, great numbers from Rocket, and we're seeing probably a little higher margin, overall margin, than what analysts were expecting. So that's always good to see. As far as their guidance goes, if we scroll down here, let's see. Fourth quarter outlook 2021. Closed loan volume of 75 billion to 80 billion and gain on sale margin of 2.65 to 2.95%. So basically take the midpoint of the gain on sale margin and multiply it by the closed loan, or the midpoint of the closed loan volume there, to get what the expected revenue is. So what we'll do is midpoint of closed loan volume is going to be about 77.5 billion, and midpoint of the gain on sale margin is going to be about 2.8%. So 2.8% of $77.5 billion. That gives us actually right around 2.11 billion for revenue, which is actually a little bit lower than what was expected. Actually, kind of significantly lower. So analysts were expecting guidance of about 2.43 billion. So missing that guidance by about $30 billion there, or about 15, little less than 15, maybe 12% or so. So pretty decent miss there. Now the thing is though, they don't give us actual guidance for EPS here, or net income. We just have closed loan, net rate lock, and gain on sale. So we kind of have to do a little deducing here. Basically though, if we take their, actually if we go back here, if we take what they made as far as EPS, about 57 cents per share, and we say they did that when they did adjusted revenue of 3.16 billion. So that's about, I think, gross margins, or actually margins on that of, I think, about 18%. So basically, if we use that same ratio of the EPS to the revenue, and we apply that to the revenue of 2.11 billion, we actually get about 38 cents per share, which is actually a bit higher than what the average consensus estimate for their guidance for next quarter's EPS. So even though they're doing a little bit or a decent amount lower in revenue, or expected to do a decent amount lower in revenue for next quarter, because their margins, at least for the current quarter, were higher than expected from analysts. Remember, their EPS beat this quarter by a lot more than their revenue did, right? And so what that means is margins were higher than what Wall Street was expecting. If those margins do continue to stay higher, even though they come in at a lower revenue, maybe they're around that 2.11 billion if they meet the midpoint of their guidance, they could still beat expectations for next quarter for EPS, which, you know, is really what we want, right? A company's net income, a company's profit is really what matters here. You know, if they can achieve a higher margin with the same amount of revenue, that's great, right? If it doesn't affect the bottom line, that's always a good thing. So that's kind of the main thing that I'm looking at as far as how they did this quarter and what guidance they're giving. The other main thing that I want to talk about here is let's see. Right here it says, as of October 31st, we have repurchased, and I'll make this even a little bit bigger here. Make sure it's above my head. We have repurchased 5.7 million shares at an average price of $16.42 per share, or $16.42 per share. So what that means is, as they say right underneath that, they've used about 94 million of the original $1 billion share repurchase program. So they still have about 900 million left to repurchase, and that's $16.42. That's actually not too far off. It's a little bit lower than the shares they were buying in May. So what we got as far as numbers from the last quarter, they had only bought about 500,000 shares at an average price of $16.73. In this quarter, it looks like probably most of those shares were around $16.42, a little bit lower than that, if you combine those two. So what this does for us as shareholders is it gives us kind of a level at which we know the company is more than comfortable buying back their own shares. And so that can offer a lot of support to the stock at that level. So if we look at the chart, we can see this red line that I've put right here is right at that $16.42 level. You can see right here in July, stock comes down, hits that level, right at that level, and bounces right back up. Same thing here, we got some support. Now it did break through, but it was quickly bought back up. There was probably some share repurchases going on here as well. And the lowest that we got here is this $15 per share. And so what this does for us is a couple different things, right? One, if you're a long-term shareholder, right, and you are looking to maybe add to your position, this tells you, hey, anything 1642 or below, the company looks like it's willing to buy back their own shares. That generally tells us that the company thinks that their shares are undervalued. And so that might not be a bad time if you're going to add to your position to add at those levels. The other thing is if you're trading options, and I've talked about this a couple times in a video and on my Discord server, what you can do here and what I've been doing is I've been selling puts, and I'll kind of look at kind of where the stock is, see what I can get for different puts at different intervals. And I've been selling puts anywhere from $16 down to $14 depending on where the stock is. And the reason I'm comfortable doing this is, one, because just like somebody who wants to add to their long-term position, if the stock goes down to $15, $14, and I know the company is buying back shares at $16.42 or below, well, then I'm comfortable buying shares there as well. That's just my personal opinion. Also, because I know that the company is comfortable buying back shares at those levels, I know that there's going to be a lot of buying pressure that's going to be pushing the stock up when it reaches those levels. That means that it's very unlikely that the stock really goes too far below those levels unless we get some other outside news that comes in, some macroeconomic factors which could affect not only Rocket but the entire market as a whole. And so what I'm doing here is I know, hey, there's a lot of buying support. The company is comfortable buying back these shares. So I know that, one, if the stock does get down to those levels, I'm comfortable buying those 100 shares for each put contract that I sell. And very likely, though, the stock won't get to those levels, and I can just continue to sell those puts every month or every 2 months, whatever interval that I want to do those at, and I can just continue to make extra income off of those put options that I sell. And because Rocket's been a little volatile recently, those have actually been a pretty good source of income. They've been priced pretty well for somebody that's selling puts like I am. So that's what I'm doing with the stock. Again, I don't currently own any shares right now, but I have some call options, and I've been selling those puts. And if those puts, if it gets back down to that $14, $15 level, and I do have puts that become in the money, I might actually just let some of those be exercised. I might kind of push some of those out. It really just depends on the situation. But that's what I'm doing. That's kind of what I think of this earnings report. Let me know in the comments below what you thought, what you think the stock is going to do going forward. And other than that, I will see you guys next time, and have a great day.